Hey traders, terrific Tuesday here. I'm Krishna Joshi with 7 Points Capital, and I'm here with today's trader takeaways. Fantastic day on the desk. The volatility that everyone was waiting for. The volume is back in the markets. More than 200 million shares on SPY and pretty much every liquid ETF and sector ETF out there. So fantastic day overall on the desk. One of the best days, something that we wait for all year long. You This kind of excessive volatility and volume is something you get once every 6 months, 6 to 9 months, sometimes longer. So which is why when you get this opportunity, you want to make sure that you hit really hard. And more importantly, even before that, the goal is to come in really well prepared. You exactly want to know what stocks are you going to focus on. Are you going to be looking at market making stocks? Are you going to look at trending or reverse trending stocks? So it's exactly everything comes down to the. I'll jump right into S&P 500. The daily chart looks terrible. Makes a high of close to 287. You can see 286.62 on SPYs just 5 or 6 trading days ago, sometime last week. And yesterday was a massive sell-off. I'll go on to the 60-minute chart. You can see the moving average is trending down. You can see the stocks going through, the S&P 500 going through levels, going through 280 at first, then it's breaking through 275 important levels. And yesterday there was just massive, there was just panic selling going on. You might want to call it profit booking. You might want to call the bond markets are turning, the Fed's trying to increase the interest rate. Most of those was factored in. So again, like what you could see was lot of selling, like all of these heavy market stocks just selling off. And once it broke this 273 level, the next stop around 3 o'clock was right around here. I'm gonna go into the 5-minute to give you a better idea. Right there, so close to 3 o'clock, it's still trading at like 271. And look at what happens after that. Just around 302, 303, the stock the market just dives, just pushes back all the way, goes down to 263. Look at that pullback, 269, and all the way back, closes at the low point. Not just that, it keeps selling off in after hours. And that was the worst part, and that is when the panic selling started off in the volatility ETFs, which were XIV. Look at that sell-off yesterday. You can only see this much action for today. That's because it did not trade for most part of the day. It was locked up. The quotes did not open, so there was no trading going on up until sometime around 2 o'clock, as you can see. So right, look at this, trading at $95 at 4 o'clock. And it closes at $10. It hits a low of $10. If you're still in office watching this go down, there's no shares to short because this is like 5 o'clock, 6 o'clock. There's no way we could ask for more. We could ask for shares to borrow. And the other one was SVXY. Just fantastic short going on. You can see massive panic selling going on, liquidation. You can see margin calls. You can see institutions exiting the positions. This one did open a little earlier than XIV did, which was around 12 o'clock. And I'll show you the 1-minute chart. It closed around, it hit a low of $10, just like XIV. It closed around $16. And today, it opened at $11. It did go up eventually in the end, but compare it to this. It was trading at $100 and it's now at $12. So massive panic, a lot of volatility ETFs that a lot of people don't understand. And this is when people started pulling off the prospectus, started reading what these products really mean. But let's jump into the trader takeaways. By that I mean, let's jump into the stocks that were really active the most on the day. As you guys know, I usually divide it into 3 segments: my best stocks, my worst stock, and a trade that I would have done much better. So starting off with the best stock, WFC, Wells Fargo. The bank had SEC negative news yesterday morning, and with the sell-off in the market yesterday, it actually it was down 10% yesterday, which we call it SSR, which is stock seller restriction, short seller restriction, 10% down on the day, and it closed really weak. So the idea today coming in was seeing how XLF is acting and trying to capitalize on most of the moves. But the SPYs just rallied off right at the open, right? So the SPYs open up around 262 and just rally straight up. And this is when, like, this was one of the easiest trades where you traded off the open, the opening range break, that's what we call it. And once it broke below the 50, broke past 57, that was an easy trade to hold because there was a lot of buying. It was actually lagging behind XLF because this was one of the stocks that was coming in with negative news on the day, carrying forward from yesterday. So once it broke past 57, it did really go exponentially up until like 57.50. This is where was my first trade. I got out probably around in the 50s. So this was a quick trade right at the open, where the idea was looking at how the level 2 acts, like position sizing accordingly. And I got in with a few thousand shares with a stop below 56.87, and this was a quick excellent trade to start off the morning with. And the idea again here was to keep watching the S&P 500s rallies right at the open, and you can see the S&P 500 made a double top, XLF makes a double top, and WFC, actually what WFC tries to do there is, let's look around 10:05 in WFC. So WFC actually keeps going higher at 10:05 because of the pullback was massive in this one, and it actually keeps going much higher from there. So this was one long trade where the SPYs were trying to pull back, XLF was taking a breather, but WFC was just massive. A lot of buying going on across several dark pools. You could instantly sell, get out on the offer price. So if you bought the offer and if the stock flips up, as instantly you could get out on the next offer. So that's how aggressive the buyer was, and that's why he pushed it. It did not make a double top right around here. Instead of 58.15, it pushed 25-30 cents right up. And right around here, I had the stops in there, trying to trail it, because the idea was to focus on hitting singles. If the trade works out, the idea is to trail the stop loss really tight so that you can get out at most of the, like right around the top, instead of giving it all the way and then waiting to add on the pullback and waiting for a bigger secondary move. Now on this kind of a day, you want to take as much as it gives. If possible, you want to get involved again when it moves again on the second trade. But the idea is keep booking profits, keep paying yourself, let the P&L cushion build up, and that's when you can gradually size your position, and also you can look for bigger trades, better trades. So WFC being SSR from yesterday was one of the best things, because once the stock started a downtrend, it would just keep going down. So once the SPYs started rolling over right around this level, WFC was just setting up amazingly well. Mike had an excellent trade right around here, right around 57 and 57, 28 and 25s. Right around here, this was an excellent short trade. Didn't really shake you out of the position. As you can see, the short, it's just trending nicely below the short-term moving averages. No real shakeouts. So this was one of the big moves that we could capture on the desk. Not just myself, a lot of other guys on the desk were involved. And then as you can see, the SPYs just rallied, took off the recent highs, the temporary high that it had put in, and which is when WFC again just rallied like almost 2 points. This is like 2.5-3% on a huge, one of the largest banks in US. So excellent day overall. Great setups in WFC. The second stock that we were watching was WFT. The idea was WFT's had earnings last week, poor earnings, even though they gave a decent guidance on the EBITDA. The stock was beaten down 10% on day one, also down 10% yesterday. This is Friday, this is yesterday, down 10% as well because of the overall market correction. And so the stock has been down SSR 2 days in a row, and the stock's coming in really weak. And instead of really trying to buy it off the open, because on the open my idea was focusing on AMD, NVDA, and Wells Fargo. And in this kind of stocks, I want to get involved around the secondary move, which is around between 10 o'clock and 10:15, which is where we started looking on the short side. As the spies make a double top, the idea was to get short. The offer was definitely there at most point. I did clip the 16s and 17s a couple of times, and it tried to break through the 20s. As I could see, like really the bid did not really chase it up all the way. Like the depth on the bid was not really as much. So the idea was get short around 315s and just trail the stock as long as the spies and as long as the USOs are really looking weak. And this is USO, the oil ETF. The spies kind of kept drifting down from there, and WFT had no real reason to get out of the trade. This was again a good 10-cent move on WFT, while spies were actually just pulling off the open, and it actually put, as you can see, spies put a higher low, whereas WFT did not. WFT kind of made a double bottom, so it did retrace back a lot of it, which is why I'm not really looking to go long once spies are trying to turn over on the upside. So this was one easy trade to be in WFT. Day 3 down SSR. It's one of the biggest oil drilling companies, similar in the field as Baker Hughes, Halliburton, Schlumberger. So definitely one of the big stocks, and as you can see, it's trading off really lows. It's trading at $3, which is multi-year lows. The third stock which was good on the day for us was AMD. Looking at AMD right at the open, because AMD sold off massive yesterday. It had an intraday huge dip intraday. This is when it hit down 10 SSR yesterday intraday with the spies. And it actually pulled back, retraced a lot of it yesterday, and again closed pretty weak. And even after hours, this was going down, because as you noticed, the after hours on S&P 500 after closing at 265, it sold off to 260 actually. So AMD is one of those market stocks which you know is going to react to that, and it actually kept drifting lower in after hours yesterday. But with the spies opening around 9:30 around the open bell, it was just positive, because you knew what S&P 500 had done globally overnight. You knew that the spies were trading much higher off of that. So the idea was look at good risk reward setups where you can get long against a good tight setup. You're trying to risk about 3 to 4 cents. Ideally you would want to risk about 2 cents on AMD. That's usually my setup, but on a day like this you want to go much smaller size, and at the same time make sure that you can also maximize profits while not giving back too much. So I think the first trade in this was long around 11.11 on the way up, with the spies really rallying off it, and this was a good spot to probably add as well around here. So this was still, again, this was much higher. The first trade was right around here, risking just below 0.7. I booked a little bit around the 25s, and then got involved again a little later around the 40s, I think, which is right around here. I did definitely feel like you might be chasing it, so again the position sizing was very minimal, risking only about 3 to 4 cents, so hardly risking, just risking quarter position of what I would usually do. And as the stock wants to work out, if the trade works in my direction, that's when I'm looking to add. So this was again a good secondary move, a good setup where you get involved, it sets up again, gives a good tight risk reward setup, buy on the breakout around the 50s, and then just keeping the stop really tight around the 45s. So this ended up being a good morning. So right off the open we had like excellent trades in WFC, AMD, and right around when spies wanted to, they kind of felt extended, rallying off from 258 to 267, 268. That's 10 points on S&P 500, which is good 4%. So definitely market, as it took a breather, we wanted to look at how the market wants to behave at that point. one good trade that I could have, so one bad, this is the second category. A bad stock on the day was NVDA for me, because this is again a market stock. This had huge, the spreads on this were really huge. So I was actually using NVIDIA to trade AMD pretty actively, and just making sure that if AMD is, if NVIDIA is trying to looking for a pullback, then I'm also making sure I'm trailing my stops in AMD really close. So this was, if you remember, in AMD was 1150, where it set up again and gave a breakout. So definitely I like to use similar kind of stocks as reference points. And AMD had the breakout at 1150. This kind of kept trending up, and with Spice kind of pulling back, I actually did not have the confidence in the long setup right around here. So had a huge run from 205 to 225, which is 20 points, which is like 9%, 10% on NVIDIA. It has a huge pullback with the Spice, almost pulls back 50% of it. So I buy it off of 217, 216.80, 217. The spreads were there about 30-40 cents. I tried to cut the spread. I tried to get some midpoints, 216.80s, 216.95s. I got long around here, but with the Spice still looking weak, I got shaken out right around here. So instead of letting my stop work out and getting stopped out below 215, I took it impulsive exit, and I got out around 215.90 or 216.10, somewhere around here. I got a mid price around there. So that was a bad take, which is why I feel like I should have done much better, because Spice actually ended up putting a double bottom in here, and NVIDIA did not even get close. So instead of letting my stop work out, I took off an impulsive trade, and which did work out pretty well. This is the kind of setup that I usually enjoy, and I should have definitely done much better in this one. Let me show you how it looked intraday. So this was my entry right around here. It looked pretty good, but again with the Spice, it did not give me confidence. I definitely want to have much more confidence going into these kind of setups, because you have a clear defined risk, you have a clear defined stop loss, and being involved, watching the Spice really closely, very actively, that's when it can really mess with your head, kind of make you have an impulsive exit, in this case around 215.90, which is when it felt like maybe if Spice want to go lower, I want to make sure whether this is not a lower high, and I want to see whether it wants to break on the upside or the downside first. So the first thought that came in mind was, let's take off this position, let's see how the Spies act, and I ended up missing this trade. Would have been a really good setup, nothing to get shaken out had I been involved. So it would have ended up working out pretty well. Probably get taken out around here instead of having an impulsive exit on this trade. Stock ended up closing pretty high on the day. Almost took off the highs from the open. So this was one bad stock for me on the day, bad trade because of an impulsive take, and that's something I want to focus on. S&P 500. Third category is where one trade that I could have done much better was SPY. So we were actively trading UVXY, SPY, being in the market stocks and making sure that you have a feel for the market, you have feel for what the stocks are really doing, and also having a feel for the financial. Let's say if I'm watching WFC, I need to know how XLF is doing on the day. Or if I'm watching the Brazilian stocks, I want to make sure that I know what EWZ is doing. So today we were definitely watching SPY very closely. We had a lot of setups, and one breakout setup in this that I had was right around 263.50. 263.50. This is again, if you look at the time, which is around noon, which is after the NVIDIA trade, which I impulsively got out around this time of the day in NVIDIA. So I got involved on the long side. After it makes a double bottom, I have a clear defined entry point where I know I'm getting out on the breakout on the upside. I know my stop loss, which is below 261, and I do take it, again, being one of my goals on the day was to make sure that I trail it really close. So I did get out eventually at 264.70 instead of capturing most of the move all the way to 269. So I kept watching. This broke out really well. If we want to look at it one bar at a time, try to go back. And I had a feel for S&P 500 because this is what I'd been watching from after 4 o'clock. I'd been watching pre-market and just having a feel for it. Rallied off 10 points, pulled back about 6, so about 60%. So it retraces back, makes a double bottom, and this is where I get involved around the 263.65 to 263.70 area. It does this, goes back up, and I kind of trail it really close, and I get stopped out around 264.85, 264.90 area, and ended up being on the risk reward side. I did not, something I could have done better was because it ended up being a 1-to-1 trade. I made like a point and a quarter on it, while I was also risking like close to 2 points on it. So this is something that I usually don't end up enjoying because the probability is not in your favor because you're trying to risk all the way till here. And as the trade started working out, I started trailing it much closer instead of still letting the 260 ones work out for me. And probably once that it would have put up like a lower, like a higher low, this is when I should have been actually looking to move my stops. But this again goes down as a bad or a setup where I could have done much better because I do want to let the stops either take me out or wait for a convincing breakout on the upside before and after which I should be moving my stop loss. That would have given me a good opportunity to capture a lot of the moves at about 5 more points, and that's something I want to focus on. So to summarize the day, on this kind of excessive volatility day, I want to keep myself under check. Coming in the morning, I want to have set of rules, set of goals for the day. Yes, excellent day for the desk, excellent day overall for a lot of market participants, a lot of traders on the desk. But again, this is the kind of day where you really want to push yourself, you want to maximize. While having these goals, the idea is to have solid risk management, also trying to maximize your profit levels. And as we summarized, great setups, some of being involved in the active stocks, being involved in the market participants. Look at this, 350 plus million shares traded. So you have to be involved with S&P or have a feel for what the markets are doing on a very short term basis for you to be involved in the market for being intraday traders. So this is what is the trader takeaway from my end. Thanks again for watching. Feel free to write in your comments and throw in your questions, and thanks again for watching. This is Krishna here from 7 Points again.